What's going on, guys? In this video, I want to give you guys 3 tips that you can kind of take away if you're looking to become a profitable trader. Now, a lot of this stuff is going to be very basic, very fundamental, but you have to kind of work on the basics and understand the fundamentals if you ever want to gradually increase and become more consistent and more profitable. First thing is going to be to develop a solid trading plan, and that's going to include all your risk parameters. What are you willing to lose per trade? What are you looking to make per trade? Do you have realistic expectations? Have you written down a checklist for what you're going to be looking for to enter a trade and what you're going to be looking for to stop out of a trade? A lot of times you guys understand a basic overall strategy or a concept, or you throw an indicator on your chart, but you have no real idea on what you're actually looking for when it comes to allowing the trade to come for you. So instead of allowing trades to come to you, you're searching effortlessly for, each little tick to the upside, each little reason why you could potentially short this next candle. What you need is a structured plan that's going to provide some guidance, because once the trading day kicks off, once the bell rings, things tend to get hectic. You tend to throw your trading plan out the door, and every single day you come into the market with a plan mentally, it gets thrown out of the window 5 seconds after the market doesn't do what you want it to do. So definitely write down your trading plan. I would recommend writing it out by hand, putting it somewhere on your desk, whether you need to pin it on the wall in front of you, whether you want to put it on a big notepad on your desk, it doesn't really matter, but it's going to help you stay focused. It's going to give you clear objectives, and it's going to help you avoid those impulsive decisions. Now, second thing is to understand basic overall technical analysis and basic chart patterns. Understand basic candlesticks, understand basic, what is an engulfing candle? What is a reversal candle? What is a doji? Understand the basics. Understand the basics of supply and demand. What is supply and demand? Supply and demand is nothing more than when a price gets to a certain level, it tends to have a little bit of trouble breaking through, and the market tends to push down. That's what's called your area of supply. That's your area of resistance. When a stock also consolidates and it's going up and down and up and down, but it's kind of creating a little bit of a floor, that is what's called your demand. That's going to be your support. So just having a basic idea of where stocks are stopping, where stocks, tend to have a little bit of trouble, is going to overall give you a better sense of the market when you're looking to enter and exit your trades. The best thing that I would say to do is go to a daily chart, a 4-hour chart, or a 1-hour chart, and kind of look at the areas, the highs and the lows, and kind of understand what is price doing when it's getting to these specific areas. Once you've established that, you can kind of build your strategy and have a strategy around these bigger time frame supply and demand areas, where you guys can kind of take your trades in between those zones, or when they break through or they break out of those zones. The next thing I was definitely, it's no secret, I speak about it a lot on my channel. I speak about it a lot in Evolution Traders with some of my traders. But I think it's probably one of the most important things that you guys need to focus on is having discipline and emotional control. Okay. So one of the biggest challenges that a lot of day traders are facing is maintaining discipline. Okay. And not only maintaining discipline, but also execution. Okay. And emotional control. A lot of times you come into the market, you know what you need to be doing, you understand what mistakes you've been making, but you lack the discipline to implement it over a series of 20 trades or 30 trades or 40 trades. Let's say you win 1 or 2 trades, you get a little bit overconfident, and then all of your rules and all of your discipline and emotional control go out the window. You will never be profitable long-term or consistent over time if you lack emotional control. Emotions is probably the number one thing that you need to tackle when it comes to trading. Work on your emotions first, and then understand technicals is very easy. Understanding the technicals becomes extremely easy. Understanding and identifying where you want to get in and out of a trade becomes extremely easy when you're a lot less emotional. So there's some emotions that kind of arise when you're looking to take trades or you're in trades. You know, those basic emotions are things like fear and greed. Those things can cloud your judgment, but I want you to understand that not just you are dealing with these problems. Everyone's looking at the same set of charts. Everyone understands where the basic supply and demand zones are. What separates you from being highly emotional to the next trader who is not highly emotional and is able to manage trades a lot more consistent and be profitable? The number one thing that it normally comes down to is position sizing. So the more money you have on the table, the more you need this trade to work out in your favor. Okay. So for example, if you were trading a $10 stock and you bought one share and the stock moved against you 10 cents, would you be emotional? Would you make erratic decisions? My answer is probably not. So if you were trading 10 contracts on the NASDAQ 100 and the NASDAQ 100 moves against you 30, 40 points, how emotional are you going to be? Probably pretty stressed out. And the only difference between these two situations is that you have more risk on the table that is going to cloud your judgment and make you feel these impulse emotions. Okay. So number one, stay disciplined, come in with the same approach, look for the same entries, play with the same position sizing where you can handle those losses and those swings up and down, and make sure you're regularly assessing your performance. So again, if you don't have an online journal, you don't need to go out there and spend a lot of money on these journaling softwares that are available. They're great, but all you realistically need is a pen and a pad. Write down your entries, write down your exits, but overall write down, what did you feel when you were in these trades and how did you react when the stock was in your favor and when it was against your favor? How did you feel? Once you start to understand how you felt once you're inside those trades, you can now start to work on what you need to manage. So again, guys, if you like this video, I work a lot with traders one-on-one through voice call, through Zoom, through live webinars, through the live trading that we do in Evolution Traders. If you need help understanding how to stay disciplined and control those emotions, or building a trading plan, or understanding a strategy, understanding technical analysis in full, and developing that overall trading plan, join Evolution Traders. I'll see all of you guys on the inside. That link is down in the description box below. Again, to much success. To everyone else, like, comment, and subscribe, and I'll catch you guys on the next video.